Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carrillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carrillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carrillo. Today we have Olga Vodolazschi. Olga spent a number of years in mergers and acquisitions department of a Big Four accounting firm. She then moved to a mid-sized firm to focus on high net worth private clients from all over the world. In 2017, she joined her current firm in Miami, Florida, as Director of International Tax and advises her clients on all aspects of U.S. tax compliance, specifically in regards to real estate. Olga speaks English, Spanish, Russian, French, and Romanian. So thank you so much for being on the show, Olga.
No, thank you so much, Charles, for having me on your podcast. And wanted to also say thank you to the listeners and to the viewers. And then hopefully this will be a productive session.
Oh, no, I bet it will be. So I touched on your background briefly. Can you go in a little bit more depth about your background prior to starting with your current firm?
Sure. So by profession, I'm actually an attorney. I'm licensed in New York State and in Florida. I did start my career in one of the Big Four accounting firms in KPMG in mergers and acquisitions. After spending some time there, I actually wanted to move to smaller firms because I'm a true believer that, professional expertise and client service go hand in hand. And I think that, in smaller firms, you can dedicate more time to that. And, it's not just about giving advice to clients, but it's also about making them feel that they are, well-guided, that they're always well-serviced, and sort of, that you're always a phone call away for your clients for any additional questions. So that's how I moved into smaller firms. And eventually, as you mentioned before, I'm currently a partner at Lopez Levy Lowenstein Glinsky, which is an accounting and tax advisory firm in Coral Gables, Miami, Florida.
Okay, awesome. So getting into it, what are various federal tax rules foreign investors should be aware of before or when investing in U.S. real estate?
Mm-hmm. Right. I think we can spend quite a few podcasts on that. It's quite of a comprehensive question. So, I'll just give the bare bones and just a few snippets of what international tax for foreign investors is all about. But I think the first sort of question and the first thing that any investor needs to understand is what is the scope of the investment? Is it long-term? Is it short-term? Is it in a commercial property? Is it in a personal residence? Is it just him, her with his family, or are we talking about corporate investors? So I think the important part is sort of to understand the framework of the investment. And then, of course, to understand all the tax implications. So as a general concept is that the United States has the worldwide taxation system, right, for the U.S. tax residents. So while we have the U.S. tax residents on one side, then we have the non-residents, which would be your typical foreign investors that you are inquiring about. So the foreign investors are only taxed on what is called U.S. source income in the U.S., right? Meaning we can talk about rental income, right? Since we're talking about real estate, or it's capital gains upon the sale of the said real estate property. So that is sort of the main concept to keep in mind, the U.S. source income when we're talking about non-resident aliens. So what would be the taxpayers who are not green card holders, who are not passport holders, U.S. passport holders, and who do not exceed a certain amount of days in the U.S. in order to become tax residents. So, I don't want to confuse people more than that. So I think I'll stop at that when it comes to what is the sort of the main way how foreigners can be taxed. It's on all of their U.S. source income that is being generated within the U.S.
Now, for foreigners that are selling real estate, there's a special withholding. Can you go into a little bit more about that?
Right. So I believe you're referring to what is called FERPTA, which is the specific withholding for foreigners. Convoluted soup of letters. What it stands for is Foreign Investment and Real Property Act. And I always like to put in the sort of in the framework for clients what this rule is all about and where they came from. So it was passed in 1980s, and basically what was happening is that foreigners and they would not be accountable for taxes, and they would just leave to their basically an accountability mechanism that the IRS, our Internal Revenue Service, came up with. Rule, again, there are various exceptions, various rules, but the general concept is that when a foreigner, whether it is an individual, whether it is a corporation, whether it is a partnership, whether it is a trust, all of that is called a foreigner. So on the foreigner, there is a 15% withholding on the fair market value of the property. So that is that way, upon the sale, the 15% is held by IRS, and then the foreigner would have to file a tax return in order to get back their refund, because their tax might be much lower than that 15% that was withheld by the IRS. Again, this is just the general rule. There are a lot of exceptions. There are ways to minimize this withholding, prior to the closing of the transaction. There are various provisions where FERPTA would not even apply if you, again, present the case to the IRS. But just it's something to be aware of as this rule exists. And in often cases, foreigners are a little bit apprehensive of this, but at the end of the day, it is just an accountability process. It is not an additional tax. That is what I always like to tell my clients, that it is not an additional tax. It is just a tax like all the other, U.S. residents are subject to. When they sell a property, they have to pay tax on any gain.
Interesting. Yeah. So they would have to file a tax return at the end of the year and possibly get back whatever is owed, whatever they actually was not owed to the government.
Exactly. What they sort of overpaid through the withholding. Exactly.
Awesome. So how do you decide what entity structure is correct for foreign investors when developing a plan to invest in the U.S.? I know there's so many different nuances. Say they want to purchase a commercial property or apartment building.
Right. So I guess it goes back to what I mentioned, a few questions before. It is important if we're talking about a personal property, is it a family that is purchasing for short term? Is it something where they plan eventually to live in? They plan to move to the U.S.?
It would be for
is it a rental property?
Yeah, say it's a strictly an investment property that's probably done by one or two people, and they're forming a company, or they want to form a company to purchase this said commercial property, residential complex, something like this.
Right. So, if it's for investment, obviously it is never advisable to purchase it in personal name. Not even from tax point of view, but just talking from corporate point of view, just for liability purposes. So there's always some need for a structure. Then, as again, the bare bones of entities in the U.S., if some foreigners are aware of, our typical LLC, which is in the U.S., which stands for a limited liability company. Then what foreigners need to understand is that if that LLC has only one owner, it is treated as a disregarded entity. What does that mean? That if they buy a property in the name of that company, and if it generates rental income, that income flows up to the investor. So, he or she or they would have to file a tax return in the U.S., right? Or if that LLC has at least two owners, then it is treated what we call in the U.S. a partnership. Again, all of the items of income that are generated at the level of the LLC would flow up to the partners, and then they would have to report whatever income is generated on their personal tax return. Obviously, another point that foreigners have to take into account when we're advising about structures is the concept of estate tax, because in the U.S. it is quite of a quite of a high rate in the event of death on the part of the investors. The estate tax in the U.S. is about 40%, and foreigners only have an exemption of 60,000. So, and it's 40% on the fair market value. So, assume a typical, if we just take 500,000 or $1 million property, simple condo somewhere in Miami, do the math, and it becomes quite pricey. So, in a lot of cases, the most typical structure is obviously to put a foreign blocker, because in that case, if the investor unfortunately passes away with any U.S. property, he or she or they are not perceived to have any U.S. assets, but what they're perceived to have is shares of a foreign company, for instance.
Okay.
But again, there's sort of a lot of other structures, and it's very case by case. So I just don't want to generalize. So just a few snippets of what structuring is all about.
Yeah, no, it's just good to get in so people will have an idea. So when they're speaking to a professional, when they're speaking to you, they'll have an idea of questions asked, and they can get that all sorted out for them. Whatever, obviously, every person's estate and every person's investment structure is going to be a little different.
Yes.
One thing we have is we have some listeners that are syndicators. So they're grouping money together and they're purchasing rental property, mainly multifamily commercial properties in the United States. And they'll have foreign investors that come in, and I get asked this question a lot. And they're always wondering if they have foreign investors and they're going to be paying out, these people normally, like for a U.S. person, they'd be getting a K-1, even for I guess international person, they'd be getting a K-1. Do the syndicators, the general partners, if this person is a foreign investor, is a limited partner, the general partners have to withhold for that? They're going to have, is that a requirement? They have to withhold for that limited partner if they're based foreign?
Yeah, so usually any U.S. partnership, if it has foreign owners, yes, the partnership has to withhold on the foreign partners. And how the withholding happens is that it occurs at the highest rate of the partner. So let's say if the foreign partner comes in through a foreign corporation, right, then the withholding at the partnership level would happen at the corporate rate, at the highest corporate rate. If it's an individual investor, then the U.S. partnership would withhold at the highest individual tax rate. And then when the partners receive what you just mentioned, the K-1, which is the form where is reflected the partnership interest and the items of income that are associated with that partnership interest, then the partners have to file their tax return. And if their actual rate is lower than that highest rate that the U.S. partnership would held at, they can get a refund back, or they will just have to, pay additional tax. It sort of depends case by case. But as a general rule, yes, U.S. partnerships have to withhold if they have foreign partners.
Yeah, pretty much same thing with the FERPTA is that the government doesn't want to be going offshore looking for money.
Exactly.
They're going to withhold all of it, and then that foreign investor has to come back and kind of prove to them with the tax return that this isn't owed to me. And there's probably a ton of depreciation, especially when we're talking with this type of properties. So there might be an instance when they owe very little or none at all. So, which is awesome. One of the questions, I guess, with the I-10, and I wanted to kind of go through the process. I know you guys probably will fast track that for different investors that come to you. Can you explain a little bit about the I-10 and the process it takes and why someone would need that if it's their first time investing in U.S. real estate?
Right. So, we can take the example of FIRPTA that we already discussed. So let's assume if a foreigner or if a foreign investor has a property in the US, but it was never rented, right? They never had to actually present a tax return in the US, and then they would like to sell this property. So when they sell the property, they have to include their tax ID on the various forms that are associated with the FIRPTA process, right? With the withholding or if they want to request a low withholding prior to the closing. So what happens is that you have to present two applications. One is for the FIRPTA, and the other application is for the tax ID. So it's a fairly simple process. The application itself, it's just waiting for the tax ID can take longer, and it doesn't mean that you have to obtain it prior to, for example, filing your FIRPTA application. You would need the typical documents. It's a certified passport copy. If the client is here in person in Miami, they would just come to our office and we would certify that, we saw the passport, we saw the client, we know who that, both match, right? But if the client is not here, then we obviously have to request a certified copy from the embassy in their jurisdiction. So having the document and then, the supporting documentation of FIRPTA, for example, you mail that package to IRS, and then we basically wait for the approval. So, that's sort of how it goes. But one important point that I wanted to mention that sometimes our clients are also confused is they would sometimes call and say, I would like to apply for a tax ID. And the question is, why? Well, because I think I might need it in the future. Well, it doesn't work like that. You need to have a reason to apply for a tax ID. So it's either I need to present a tax return, I have to file a FIRPTA application, I need to, get a refund back. There has to be a reason. You cannot just apply for tax ID just because.
Yeah. Well, is it true then that if I'm foreign and I'm coming and say buying a condo in Miami for cash, do
Right.
I need to have an I-10 at that time, or is it just going to be when I'm going to sell it and there's going to be some sort of income? Let's say I made something on it. Is that the time when the I-10 would be required?
So if you buy, if you are the foreign investor and you would like to buy a property through a company, for example, through an LLC that we just discussed a few minutes ago, then that LLC needs to apply for a tax ID.
Yeah.
Because eventually you would like to open a bank account, I assume, in the name of that LLC. If this is a investment property and you would like to rent it, then that LLC. So the steps would be the following: you open a company, an LLC. You close the property in the name of that LLC. You apply for a tax ID for that LLC, and then you open a bank account in that LLC. And then you can start renting the property.
Okay. So same basic process that a U.S. investor would use for doing it. Obviously, not requiring the I-10 because we already have a social security number. But
right.
Obviously, they can just reach out to you and you could walk them through the process of what they need or what they don't need. It's like you were saying, you need to have a reason for applying for the I-10. So what do you suggest the first steps for a foreign investor to take before investing in the U.S.? Is it to come and talk to a CPA, talk to a tax attorney before buying real estate, if it's personal or for investment?
I think the best client is the well-informed client, right? That's what makes a good decision. So I would suggest to talk to the real estate agent, to talk to a corporate attorney, to talk to a tax attorney, to talk to accountants, tax accountants. And then also if down the road that investor is thinking of potentially moving to the US, maybe it's maybe they will be looking at an investor visa or they would be immigrating with their family, also to involve an immigration attorney. So I think the more information the client has, the better decision he or she or they will make. So, we always, the policy of our firm is to give a complimentary consultation the first time we meet a client, because we truly believe that it is important for the client to understand what they're getting into before, investing in the U.S. or sort of committing to something. So definitely discussing with several experts. That would be my best advice.
Yeah. So what services does your accounting firm provide? If you can just go through them so people have an idea, other than everything that we explained here, the I-10,
Right.
what additionally?
Yeah. The I-10, that is just one small part of what we do. In addition to being a purely accounting firm where we offer compliance services, we are a consulting and tax advisory firm, which I think is a crucial distinction with a lot of other accounting firms. When we meet the client, we want to understand the structure that they have, whether it's already here in the US or if it's in their local jurisdiction or wherever else in the world, in order to be able to advise on US tax concepts. So once we advise the client from sort of structure, from tax point of view, then we can move into the implementation side, where we help with filing the tax returns, preparing the accounting, and so on and so forth. So in terms of services, we help with, of course, with all the real estate structuring. If the client is considering buying some business in the US, we offer as well due diligence services. In the real estate arena, we also assist with cost segregation studies if we're talking about commercial properties, which is, again, probably a topic for another podcast. With business valuations, property valuations. We really truly try to offer a holistic approach to every client, to offer the best service, and so they can be well informed and well advised from all aspects.
That's awesome. So it's definitely a full service firm.
Yes.
And where can they learn more about your firm and yourself?
Sure. So they can definitely look us up on our website, which is LLLGPA.com, Lopez Levy Lowenstein Glinsky, and they can find our information there. And we'll be happy to assist everybody.
Okay, great. Yeah, I'll put all the links in the bottom for the podcast and for the YouTube video. So I want to thank you for being on the show today, Olga, and have a great rest of your day.
No, thank you so much, Charles. I appreciate it. And thanks for everybody's time on this podcast who was watching and listening.
Thank you. Hi, guys. This is Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in investing in real estate and you don't know where to begin, set up a free 15-minute strategy call with me at schedulecharles.com. That's schedulecharles.com.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.